Ladies, gentlemen, and the rest of you lot, welcome to ReadWriteMix, our first event of 2014. Very pleased to have such a big crowd here. If you don't know, ReadWrite is a tech news site, and we like to say we map the programmable world, which means we explore technology on a deeper level. We want to really figure these things out with you, how they work, and why they matter. So to fulfill that mission, we are now also having these live events, ReadWriteMix, where I get to sit down with really great, thought-provoking guests and map things out, do that deeper exploration. Tonight, I'm very pleased to have David Marcus, the president of PayPal. David, come on up.
All right. Good evening.
Evening. Well, let's take our seats and dive right in. So, David, thanks again for coming here to Safe Space.
My pleasure. Thanks for having me.
When I first met you, you were a payments entrepreneur, pitching me another payments startup. And I think I gave you that.
You were super enthusiastic.
Which, that's one way to put it. You actually demoed it. This was a mobile payments, a mobile payments service called Zong, and it worked. Right. I was amazed that it worked, which is something unusual in the payment space, at least, especially in the mobile payment space. Let's say 5 or 6 years ago. A few years pass, and suddenly you find yourself with this fancy title at this big company. So how did that happen?
Well, the short version of it is that Zong got acquired by PayPal in the summer of 11. And when I joined PayPal, I took over all of their mobile business unit, which was then focusing on developing mobile payments and those types of things. We got to work very, very quickly working on developing PayPal Here, which is our small business card acceptance and PayPal acceptance solution. And
that's where you can swipe in person.
Correct. And that's when we developed all of the check-in payments capabilities, and we'll spend more time on that hopefully. And then 8 months later, Scott Thompson, who was then leading PayPal, decided to leave for Yahoo. And then there was this transition period of like 2-3 months where there was a search conducted, and they were trying to figure out who was going to take over. And then 3 months later, John Donahoe sat me down in a conference room and said, we think you're the guy, and do you want to do this? Which I asked him for a couple of hours to think about that overnight, and then it happened.
Yeah. So, I mean, the common scenario is big company by small company. They, there's change at the top, and and then the entrepreneur leaves. So that didn't happen. What were the biggest factors in you not leaving?
Well, a couple of things. First of all, I think that traditional consumer internet services are very, very different than payments. And the main difference is that to scale a payments company is very hard. Like it's really, really hard. If you think about the number of really successful disruptive payments companies that have emerged in the last 10 years, there aren't many. Yeah. And there's a reason for that.
One hand.
Yeah. And there's a reason for that. And the reason for that is that, especially if you're a global payments company like PayPal is, it takes a long time to ensure that you're compliant, and in our case, in 190 plus countries, and that you've got the right platform. You fend off all of the fraudsters and the bad people who are going after you because they can make money off your back and that of your customers. And so it's hard to scale. And so for me, PayPal was such an opportunity to actually really build something meaningful for the world. Something that will actually potentially outlive me and my team in the legacy that we leave behind as people, and that's not often that you can do that in an industry that's so hard to scale. because of the complexity of the regulatory framework, et cetera. So I was really excited about this opportunity, and I saw a lot of upside opportunity in the PayPal I found when I took over versus, I think where we are right now.
Yeah. I think back, I remember just this kind of wasteland of payment startups and services. Anyone remember See2It? Anyone remember Yahoo PayDirect? Wingspan Bank. There were all of these online banks and and peer-to-peer payment startups. And then what was more remarkable about PayPal was that it survived that period. And got bought by eBay, became very, first became very integrated into eBay. Now it feels like PayPal is taking a different course. Obviously, you're still part of eBay Inc., but what percentage of your transactions are even on eBay.com, the eBay marketplace?
It's about 30% today. So 70% is off eBay, 30% is on eBay. But I think you're hitting on an important point, which is that for pure play payments companies to scale, it's almost like a parasite host type of relationship. And so you need a host at some point in time, because nobody wakes up in the morning and says, gosh, I'm going to go online and I'm going to create an online digital wallet or whatever it is. Nobody does that. And so you've got to be presented with that option to pay that should be far superior to any alternative. And in the case of eBay, the alternative was actually mailing cash or a check to a completely unknown individual the other side of the country, which obviously, now you think about this, it's like crazy to imagine that people actually did that. And so you need to be part of an ecosystem, and you need to solve real problems for people, which in the case of PayPal and eBay met those true criteria. And so that enabled PayPal to actually develop very, very quickly, and ultimately, for a whole host of reasons, develop the merchant services piece of our business, which now represents 70% of our transaction volume, which is the off eBay part of it. So. Again, the ecosystem play is really important. So we were blessed to have this history.
Right, and we see that kind of replicating itself. Where's Google successful in payments? Well, they're most successful in the Google Play Store, which they control. Everyone talks about Apple doing something in payments, but really, what they have going right now is the iTunes Store, or the App Store, which process a lot of volume.
And by the way, it's considerably harder to do payments in an ecosystem in an environment you don't control.
Right.
So if it's your own app store, it's only digital content. So if you need to refund someone because an app didn't download or whatever, it's really easy to do. If you buy something, it gets to you and it's broken, it's not what you ordered, it's an empty package with a wrench and you ordered a watch, these things happen all day long, and you have to deal with disputes and you have to protect your customers, and that's what we do at the scale of 140 million customers around the world, and that becomes really, really hard. And we literally have thousands and thousands and thousands of people doing that. And so the scale of it is really something that is hard to actually emulate.
And I think that kind of people-heavy part of the business, the part that you can't automate, is maybe what scares a lot of people off from doing payments.
Definitely, and also the compliance burden. The compliance burden is not going to get any lighter at any point in time in the future. I'm hearing some banks are hiring, literally 4,000, 5,000 people just to do compliance. Of course, we have a view that, we're a technology company and we should leverage technology as much as we can. And so there are a bunch of examples. For instance, we were the first ones to actually tap into the ability to, from a Safari session on an iPhone, fire up the camera so you can actually take a photo of your utility bill and your passport for regulatory purposes, instead of asking people to mail that, or in some cases send a fax. Who uses a fax nowadays? So we're really trying to make strides, because we're definitely again a technology company, and we definitely want to leverage technology to do that. But it's a process heavy thing.
And despite all of these moats that have kind of risen up, it seems like there are more payment startups than ever. I definitely get pitched by one every week. There's Square, which a lot of people talk about, Braintree, which fewer people talked about, but you guys eventually apparently took notice of. Recently closed that acquisition.
Yes.
Just a lot of creativity and innovation going into a really difficult space.
Yes.
What would you attribute that to, given everything you've said about the difficulties?
Well, so two things, and those are two very different reasons. One is for some of these startups, and I think that was the case of Braintree originally, they exist because for years we sometimes, on some topics, fell asleep at the wheel. And as a result of that, we created a whole bunch of opportunity because we sucked so badly at some of the things we were supposed to be really great at that startups came in and just basically delivered great service and attracted customers, and that's the way free markets and competition should behave. Good news is that I don't think this is the case anymore, and we've taken notice of all of those things we needed to become best in class at, and we're actually committed to being best in class at all of those things that matter. Developers being very, very high up on my agenda, and that's why we put our money where our mouth is, and paid $800 million for Braintree, which is a phenomenal team, phenomenal platform. Much bigger than any of the other players in the market, better technology, a whole core focus on mobile. They jumped on that bandwagon very early on. And so mobile for me, and if you want we can expand on this, but mobile is really the territory that we want to lead and we want to be best in class at across the board. And so for us, it was a no-brainer. And then there are a whole other host of startups that basically start to exist because now you've got more and more connected device, you've got more and more broadband, and traditionally the payments world, both in the physical space and across a whole gamut of places you can buy and shop, is actually still predominantly operated with equipment that's connected to phone lines and all kinds of stuff. So this is a huge opportunity for all kinds of startups to actually disrupt the marketplace. And I think that's great. I think competition is the best thing. It's the best invention because at the end of the day, the customer always wins. They get better services. It forces large companies that become really complacent to actually keep on innovating and reinventing, and I think it's the greatest thing. So I'm all for competition.
You talk about complacency at big companies. Was that when you told John Donahoe that you needed a few hours to think about taking the president job at PayPal? Was that one of your worries? Was the place just too complacent at its core?
Well, clearly I needed to know that I would have enough leeway to drive the amount of change that I wanted to drive, which was a resounding yes. And yes, I mean, there's no doubt that we needed to change a lot of things, and that notably our product development cycles and the way we thought about product quality was a little bit out of whack. And we changed all of that. I mean, we had 9 different product groups. We had like a very IT shop-centric type of way of developing new products. We had no engineering craftsmanship and excellence. And we had to bring all of that back because we had that at some point in the past. And so what we did is, we've basically restructured all of that. We have one product group now. We moved all of our engineering team, which is 3,000 plus people around the world, to Agile, all of them. And so now we have small groups of really dedicated engineers, designers, and product managers who, whenever we can, are co-located and iterate much faster.
Were you doing waterfall before?
It was waterfall, and the way it was done was that as a product manager, you were supposed to write product requirement specifications, send them over the wall to a PMO organization, which is a program management organization that would assign random engineers based on their capabilities to that project. And then when the project was live, generally a year later, those engineers would be reassigned to other stuff. And so your chance as a product manager to actually iterate on products was close to zero, because then you would have to lobby for resources. That would take another 6 months, and by the time you get other people, it's like 2 years later. And so as a result, you've got product managers who want to try to think of all of the stuff they might want in the lifetime of that product and shove that in their requirement specifications, which makes for bloated interfaces and products.
Because they might not have another shot.
Exactly. And then what they learn in the first couple of months of a product being live, they can't actually feed back into the product experience for another year. And so we've changed all of that now, and we're very centered around customer-driven innovation and development. And so we try, we do multivariant testing on a bunch of different things. We have a new checkout experience that we just announced as a result of that. And it takes a while. And we can iterate very, very quickly on the same product experiences and do that very quickly. I mean, that's the only way I know how to build products, by the way. But any startup
you looked at this old system and said, like,
no, but anyway, any startup builds products that way, and that's the reason they can iterate faster, and that's the reason they can disrupt larger companies, because they can iterate faster and move faster. The thing is, if you can iterate fast and you have the scale, then no one can catch you, because the number of iterations that you can put in front of people is so much more than any other startup.
Yeah.
Because at the scale of 140 plus million customers and 190 markets with all of these different currencies and languages, if you can do multivariant testing at that scale, the number of tests you run is actually much greater than any startup will be able to do in a short window of time. So your product should be better over time.
That sounds like a gauntlet thrown down in front of all the other startups.
No, it's just, it's the question of whether, you can actually apply the way startups build products to a large company at scale.
And then
that's the most fascinating thing that I'm trying to wrestle with. Right
then you
now.
have the advantage of data, right?
You have the advantage of data and the size of and the scale.
So what were the concrete results of this change of approach?
Well, a couple of things. First of all, I think we're shipping better and better products. We're definitely shipping more experiences. So it's going to sound like a big number, because a lot of the stuff we haven't announced, but we've built, and this is catch up. Our existing checkout experience that most people see is still pretty outdated. And the new one that's in context, you never have to leave the merchant website. You can actually, just type in your password or your PIN and click and you're done. And if you want to change your funding source, you click and you've got all of your wallet that shows up with all of your banks and credit cards and debit cards and credit lines.
I always feel like PayPal is trying to trick me.
Well, that's over. You're right.
And that's,
you're absolutely right.
But what you're saying is like the experience is that way, because you just haven't been able to rebuild it until now.
So no. So, we did that in the past. So in the past, we actually got our best customers, when you reach a certain threshold, to say, you can't buy that thing you desperately want right now unless you actually connect your bank accounts for your security. And that's the way we built the business, right? And we have a funding mix advantage at PayPal that built this business.
Because the bank account transactions are actually very cheap for you to process.
But my point of view on this is that you cannot win over a very long sustained period of time if you don't do what your customers want to do. You can't go against their will. You can't force them, because the day will come where they'll have an opportunity to get some payback for that thing you did to them, and they'll do it. They'll take that chance. And so we stopped doing that about a year ago. So now you don't have to do it. If you don't want to add your bank account, you don't have to. If you want to, you can. And obviously that comes with a cost. But over the long run, I think that offering consumers choice and enabling them to, of course, add their bank account, their debit cards, their credit cards, but also sign up for really flexible credit on our terms, but very consumer-friendly terms that they can click on their mobile phone and get a line of credit. then we'll have the funding mix advantage, but not because we force consumers to do something, but just because we offer them something they really want.
Mm-hmm.
And so I've got this great anecdote, if you don't mind me sharing
absolutely.
that. But and we have a few, but this one I really like. So a couple of months ago, we started doing small business lending.
Mm-hmm.
And that's near and dear to my heart because if you know many small business owners, they're great people.
Mm-hmm.
They're phenomenal individuals who don't want to be part of the system. They don't want to work for anyone. They want to make it on their own. And it's hard. It's really hard to own and operate a local store. You have to deal with your inventory, you have to buy stuff, you have to change the light bulbs, you have to make sure the place is clean, you have to advertise and find ways to do stuff, you have to pay taxes and file stuff. It's just crazy. And it's generally you're on your own or you have one employee that helps from time to time. And one of the things that we feel is a particular need of small business is working capital.
Mm-hmm.
So for them to be able to expand and thrive and have opportunity in their lives, they need to have working capital to buy more inventory so they can grow their business. Mm-hmm. And today it's very hard for them to have a small business loan from traditional banks. Mm-hmm. And so we've started that program on the basis of us knowing a lot about our small business because some of them have been with us for years and we have all kinds of data on their behavior and their, how sustainable their business is, basically. Right. So we've started that program.
You see their transactions.
Yeah, exactly.
They're familiar to you.
And so we started that program that enables small businesses to actually borrow money. Mm-hmm. And in this specific case, it was a wedding store that mm-hmm. sells wedding dresses. And the two things that business actually had was business lending from PayPal mm-hmm. and promotional financing for their customers. So on one side of it, and they used PayPal here as mm-hmm. a point of sale system. So they were able to actually buy more inventory, mm-hmm. so have more models of wedding dresses in their store.
Right.
And then there was that customer who came in and found the wedding dress of her dreams, only she couldn't afford it. And so the store owner told her, well, look, you can, if you pay with PayPal, if you go into PayPal app and sign up for what is now called Bill Me Later, mm-hmm. you can actually, get 6 free installments and you can get that dress. So, mm-hmm. Short story is that, she eventually did that and posted a raving Yelp review about how PayPal and that a little store made her dreams come true, et cetera. And meanwhile, that small business owner is actually growing her business. Had a sale that she wouldn't have had otherwise, and at the same time, growing their business because she's and so that's truly fulfilling. Those types mm-hmm. of examples where both consumers can get something they wouldn't have had access to otherwise, and small business owners can actually thrive and have more opportunity to grow their business. That's really fulfilling, and that's what we thrive for every day.
I'm going to fave this conversation on lending because I think it's a point we need to get back to. But I want to spend a little time on mobile payments. Our last guest, Simon Khalaf of Flurry, who you may know, mm-hmm. Talked a lot about how mobile is eating the world. I mean, everything is going mobile. I think it's very telling that you were in charge of mobile initiatives at mm-hmm. PayPal. Now you're running PayPal. That's kind of a mini narrative of the world at large. Mm-hmm. But how do you define mobile payments? It seems like it can be so many things. Mm-hmm. It can be, if I take an Uber and order it on my smartphone.
Pay with PayPal, of course.
That's an option.
You should get a discount.
I hear that people were not very happy about paying with PayPal and Uber, but let's get back today.
Okay, I'd love to hear about that.
It could be that where it's just a transaction that's kind of initiated on my phone, but it really happens up in the cloud. Mm-hmm. It could be swiping a card, through a device that's attached to an iPhone or iPad. That feels mobile. Mm-hmm. It could be, in many countries, it's actually billing something to my wireless phone account. Mm-hmm. So is there a way to narrow the definition?
Well,
or
for me,
how do you think about mobile?
Well, I think that eventually mobile will be everything. Mm-hmm. So at that point in time, it'll become really easy.
Right.
Because so the reason I'm saying that is for a whole host of reasons. One being that you'll eventually authenticate high-risk transaction on your mobile, even if you're shopping on your computer at some point in time. And as you may know, we were the founding members of an association called FIDO that now, Google and Samsung and MasterCard and a bunch of others have joined to just leverage biometrics to do payments, to get rid of passwords. And I think that over time, you'll eventually complete that transaction. If it's a high-risk transaction, you're shipping something to a different address than your home, etc. You'll just get a push notification and it'll ask you to scan your thumb to authorize the payment on your computer. So ultimately, it'll come to all of mobile. But for now, you've got two categories of mobile payments. You've got remote payments. So in other words, what you do on e-commerce when you go and buy something that's remote, and you get it delivered, or it's a service, which is basically PayPal on a computer, but you just do that on a mobile device, right? And that's growing really, really fast, especially if you include iPads that are an increasing share of mobile transactions. And then you've got in-store, real-world mobile transactions, and that's much slower to grow. And there's a lot of reasons why that is the case. But I feel really optimistic about where that's going to be headed in the next 2-3 years. I think that really in a major metro areas, and to stick to what I said a couple of years ago, I actually said last year that within the next 5 years, if you're in a dense metro area in the US or Western Europe or in Asia, that you wouldn't have to carry your wallet to go by your day, that you could actually initiate and complete all of the payments you need in the city that you're in through mobile. And so that was last year, so now there's 4 years left, right? And I'm still sticking to it. I still think that in cities like New York, San Francisco, all of these places, you just won't need to carry a wallet anymore.
Yeah. Seems like we're getting closer. I can go for a run and have a coffee at the end of it through the Starbucks app.
Funded by PayPal.
Actually, I think doesn't Square have their back-end processing?
Not if you want your rewards.
Okay. Fair enough. But yeah, we're not quite there yet. How is mobile performing for PayPal? Can you talk about
well, I can't be specific on numbers, and I'm not just being a good corporate citizen here by saying that. But we have earnings tomorrow, so that's SEC regulation, so I can't share numbers. But let's say that on a mobile front, 2013 was a really, really good year, and the growth has been really spectacular. And so we're doing well. I think where we're headed now is that we have new products, especially in combination with Braintree, that are really exciting, right? Braintree has great mobile SDKs. They've got the Venmo Touch experience, which is absolutely amazing. And then we have our own SDK, and obviously we're going to bring all of these things together. And now if you look at applications like Uber or others, the card processing is actually going through Braintree, which is part of PayPal now, and of course the PayPal transactions go through us. So the idea here is that we want to be best in class for in-app payments, and we want to enable all of these companies that are going to disrupt the different market verticals in their own way to have best in class payment experiences.
By the way, you're in the Uber app one more way. Your Card.io subsidiary is actually how you scan a new card into the system. I discovered that. I was adding a new card, and there was the PayPal logo, just like another. Yeah,
we made a bunch of really good acquisitions last year. We did. No, and we brought in really good talent, and I'm happy about that, because that was a way for us to also inject new talent, new energy inside of a company. It's almost like you want to inoculate the company with a virus. And I realized that I said that, I realized that when a payments company talks about inoculation of a virus, it's not a good idea. So let me retract.
I was going to bring up Target, but that's a good segue.
Yeah, no.
Do you think if Target were taking PayPal, would we be talking about this big hack?
Well, I mean, for those people paying with PayPal, probably not, because you don't share. We don't share your financial details with the merchant. Never. And that's a rule that we'll never break, because that's foundational to our business. So the answer is no.
I wonder if that will be a tipping point where we're starting to, basically, the default has been we trust the merchant.
Mm-hmm.
You know, it used to be you go to the corner drugstore, you go to a local grocery
Mm-hmm.
store, and you just trust the cashier, the person who's at the other side of the counter. I wonder if, because of things like the Target hack,
Mm-hmm.
and there have been other retailers that people are talking about, if we're going to trust those big companies less.
Well, I think, as we move forward, you're going to have a lot more data about you. If biometrics become what we think it will become over time, do you want to share your biometric data with a merchant? I certainly wouldn't.
Yeah. I'm certainly, I mean, just from a practical level, I'm not going to want to sign up 10 times.
Yeah, I mean, plus, and then, what people can do with a stolen credit card is fairly limited compared to someone who has your biometrics data. And so I think we have a role to play there, because we have 140 million active customers who really trust us with their financial data, which is really, for some people, more important or more sensitive than their medical data for some people. And when you move into biometrics and when you move into more data that's about the customer, we can play a really important role in how we sit between the merchant and the customer, enabling merchants to actually grow their business, leveraging the data they actually need versus the data that the customers doesn't want to share. And just be a trusted intermediary between those two. And the same way we were between eBay buyers and sellers at the very beginning of PayPal, where they didn't know each other and they didn't want to share bank account or credit card details with each other. So it's the same thing. It's just the story repeats again. And
it's kind of amazing, though, to think that the party we don't trust is Target. That's
well, I think
shaking.
Yeah, I mean. That will, in this specific case, I think, push for the implementation of EMV faster, which is probably a good thing from a security standpoint, a bad thing from a consumer experience standpoint, because if
EMV is the new chip, cards with the chip.
The chip, and then you have to put your card in and type a PIN code. It's a little bit slower than swiping a card, and so from a consumer experience standpoint, it's not as good as swiping a card. It's just more secure.
I don't understand how these chip and PIN solutions will work in the app era, because
they won't. So, but the way we're working on these is that we're working very closely with Visa, MasterCard, Amex, and all these companies to establish new standards for digital tokenization of card data. And so as a result of that, you'll be able to have the same level of security through digital tokenization with trusted partners, and we're one of these.
That's where you're passing like just a little bit of code that is not the actual credit card number, but
it's a hash, and then you pass data that enables those networks to make a risk decision the same way they would do it in a card-present world, basically. I mean, this is payments jargon, but
but you're basically hiding the card number, which is what was kind of at risk in the Target
that's
app.
right.
I want to make sure we have time for questions, but I would be remiss if I didn't ask about what happened with Uber today. You are very active on Twitter. I can think of very few company executives who are so responsive when when something goes wrong. When I think you just have to mention PayPal, and there you are. If someone's having a problem. First of all, how do you find the time to do that? And second, how did that play out when people were complaining that they were getting double, triple billed on their Uber rides?
Well, a couple of things. First of all, on the time stuff, it doesn't take that much time. So if you actually take 15, 20 minutes a day of your time to actually respond to customers, you can be very efficient, especially when you have a great team that can actually handle the actual resolution of the case. And I think that any corporate CEO who has consumers or customers of any kind who says that they don't have time, it's bullshit. Because you need to, you make the time you want. If you lead a company, you're the master of your calendar, and you need to know what's important and what's not. And for me, my customers are my number one priority, and that's it. And so if someone has an issue, no matter who you are, no matter how big or small you are as a customer, it's our mission to solve it for them. and we're fanatical about this, which is wasn't necessarily always the case, but that's also part of the culture change that we've been on, this transformation that has been going on for a little over 18 months now, 20 months or so. We need to be fanatical about not making our customers just like us. They need to love us. And I realize that we're not there yet, and we have a lot more work to do, especially because people get very emotional when it comes to money.
Yeah.
And so we need to create the right emotion, not the wrong emotion.
So Uber customers saying PayPal took me for a ride.
So I don't know what the exact case is, but whatever the case is, when we have issues like this happening, and those things at the scale we operate at can happen for a variety of reasons. Sometimes it's our fault, sometimes it's not. I don't know specifically about this, but
it just
no matter
so,
what happens, you have, if you're a PayPal customer and you make a purchase and something goes wrong, either with the merchant or with an app or with whatever, you're protected 100% of the time. So if you buy something online and it's not what you expected, or you're charged twice, or whatever happens, you're protected. We'll just make you whole and reimburse whatever cost you. And even if you purchase something and you decide, that's not the right thing or whatever. So it's a level of buyer protection that very few payments companies can actually afford, because you've got to become really, really good at managing the risk that some non-trustworthy merchants would actually do. Lots of people, for instance, bad people sometimes do event sales, like tonight, and they sell tickets, and then the event never happens, and they leave with the money. Well, especially because it was free, I think.
It's true. Actually, we charge you all 10 Bitcoins, but
that's expensive.
It is. That would be a nice event.
Yeah.
Speaking of, one of the predictions you made, you should all look up David's post on his predictions for this year. Definitely worth reading. But one specific prediction you made was that, at least for 2014, Bitcoin would be a store of value, but not a currency.
Yeah.
Is that a fair way to phrase it?
Yeah.
What does that mean?
Well, what it means is that Bitcoin is a store of value. It's a distributed ledger that enables many, many miners to store bits of data about where your assets are, which makes it really interesting because if you live in a country like say Venezuela or Argentina, where you have inflation, in some cases up 40% year on year, then $1 is worth 60 cents next year. Then if you have the appetite for the risk, Bitcoin is probably a better place to store your assets. When it comes to payments and being a currency, though, I think that it might get there at some point. It might become a currency in the future, but it's not today because of the volatility.
Yeah.
Great volatility doesn't make for a great currency. And so all of the players that offer Bitcoin as payments to online merchants and such basically settle in fiat currencies, dollars, euros, name it. And instantaneously, because if you're a merchant and I'm selling this bottle of water, I want to know if I'm selling it to you for $1 or $7.
Right.
Which could happen the same day sometimes, back in the days, not anymore, but that type of variation can happen. So I think that, for now it's fine. And I think that over time, maybe volatility will settle and it'll become a currency. But for now, it's just a great protocol. To me, it's like TCP/IP or SMTP, only for money. And so, it's going to be. I'm just curious to see all the kinds of innovations that will come from that. There's a great write-up. There's a great post by Mark Andreessen that came today in the New York Times, and I encourage you guys to read it. It's a good one.
It's 3,000 words, so take your time.
But it's really good, actually. It's really well written. And
he makes the point that we doubted distributed technologies like personal computers in the 70s and the internet in the 90s.
Yes. Yeah. No, and so for us, I think, as far as we're concerned, from a PayPal standpoint, because we're a regulated entity in so many countries, I actually don't think that there's a financial company that is regulated in so many places because we're live in so many countries and we're a global company. Generally, financial companies are in 1 or 2 countries.
Yeah, they tend to be very siloed by nation.
And so what we want to do is just wait and see what the governments will decide to do. And governments have very different reactions to Bitcoins. China just prohibited it outright. And Norway said, we'll just tax you on your capital gains, but we don't want to regulate it. Mm-hmm. So, you're going to have a multitude of different standpoint that the governments will take in the next 12 to 18 months, and we're waiting and see. And then we'll determine whether it makes sense or not.
But going back to the wedding dressmaker who you talked about earlier, could that store use Bitcoin? I mean, all the scenarios like borrowing money from PayPal, lending to their customers, can that even take place in a Bitcoin economy?
Well, in theory, it could, but then you need companies that set up systems to determine what's going to be the cost of that loan, which is going to be established between the borrower and the lender based on risk profile and data that company will be able to collect on the borrower. So whole new opportunity for businesses, but I mean, at this point in time, again, the volatility makes it hard. There's no buyer protection of any kind, so it's like cash. You've paid for something, you're not happy with it, too bad. So there's still a lot that needs to be built.
Which is great if you can.
Early days.
Yeah, that's great if you can deliver the good or service electronically or instantaneously. It's not very good if you have to ship something.
Correct.
Maybe we need a Bitcoin escrow service.
Maybe.
Like the credit card escrow services that popped up in the 90s.
Yes.
I think we want to start taking questions. I do have some questions lined up on Twitter. We have some microphones being passed around. I can. Yes, sir. You can start. I'll repeat the question.
I just wanted to let you know I cannot see you right now. The spotlights are so freaking bright. But I can hear you, sir.
So my name's Mitch. I work for Limited Networks on prepaid electricity. And we work in developing countries where there's very few banks and a great demand for mobile money. But when they say mobile money, they don't mean on smartphones, because there's very few smartphones when people earn $1 or $2 a day. Can you say anything about how PayPal is going to reach into those markets?
Sure.
Especially when you limit it basically to SMS or USSD.
Sure. So I don't know if everyone heard the question, but it's a question about developing markets and how do you do it in countries where you don't have mobile broadband and smartphones. And so the answer is we've done that in Brazil, and we've done that fairly well in Brazil, for instance, where over there, even if in cities like São Paulo or Rio, the smartphone penetration is actually fairly high, it's 30-ish%. The number of people who have a data plan on those smartphones is very small. Only 10%. So basically they use their smartphones where they have Wi-Fi, which is really intriguing. And so in Brazil, what we did is we partnered with Vivo, which is one of the largest carriers there, and we built a full-fledged USSD-based flow, which is basically riding on the SS7 rails of the carrier, to basically create a PayPal account and pay for stuff. And we've acquired over 2 million customers in the last 12 months or 18 months that way.
And USSD is this very kind of old school data protocol.
Yeah, you basically type star 21 pound and you make a call, and then you've got a contextual menu that shows up on your phone. And it works across all terminals, all phones, because it uses the signaling protocol of the carrier to do that. So we've done it, and we're willing to adapt. I mean, and that's the hard part as well of being a global company, is actually adapting to every single market needs with the right type of solution. And it's hard.
Yeah, but you have to meet the customers.
You absolutely do.
Customers halfway.
Yeah.
Question from Twitter: how do you compete with San Francisco-based startups for talent? Do you find it challenging to pull them down to San Jose? Of course, you've got offices around the world, but I think I think they were asking specifically about in the Bay Area.
So, look, we have a lot of people who commute, and it's a pain in the neck. Right? But they do it because the mission, the opportunity to really build something unique at PayPal is really there. And I really mean that. It's like really people are motivated to come to work because they know they're going to make a difference. And then we just got to do a better job at finding places for people who live in the city to work, but no specific announcement to make on that front.
But you did pick up an office of Braintree, actually, like
that's right.
2 blocks over.
Yep, that's right.
Is that,
it's a nice office.
Okay. Fair enough. Yeah. Did you take a peek in on the way up?
No.
Right on. Let's see. We'll take one more question from the audience, and then another question from Twitter. In the middle there, if we can get a microphone. There we go.
Hi, my name's Kelly, and I represent Highwire PR, and I have a question. I know, David, you mentioned that in the next 4 years I will all be using mobile wallets, and so it makes me think, does that mean the next 2 or 3 years we will be stop using like cash or credit cards, or what we know as credit cards that we carry now? Would it take a different form, like the chip you mentioned?
Mm-hmm.
So I wanted to get your thoughts on the future of cash and credit cards.
Well, I think that cash was money 1.0, right? And I mean, just if you forget about barter and coins made of stone and all that stuff. So cash was money 1.0. Plastic to me is money 2.0. And when I say plastic, it's like consumer credit and all of the good things that this great country has been built on. And then there's money 3.0, which is for me mobile. And so to answer your question, I think that ultimately all of these things will converge to mobile. And we hope to make it PayPal on mobile, but all of these things will converge to mobile. And cash will still be out there for a while, but for reasons we can't necessarily change or control. And I found that out when I went door to door one day, trying to figure out what the needs of small businesses are in the real world to build a better product for PayPal here and the 30+ POS partners that we've integrated check-in capabilities from mobile.
You were knocking on doors, saying, "Hey, I'm David Marcus."
No, I was just not.
You were just stealth.
Yeah, but it was really good, and that's how we came with Beacon and all these things. It's because we spent time with customers and trying to figure things out. And bottom line is, they say I still want my old cash register in some cases for small businesses, and the bottom line was because they don't want to necessarily declare everything and pay taxes on everything. And so those types of things, we can't change. But from a technology standpoint, when we built Beacon, for instance, and really found a way to do completely hands-free payments where you can really focus on your shopping experience that you love and make the part that you hate paying just go away. Mm-hmm. And so I really think that those types of technologies ultimately will take it to the next level.
Right on. I think I'm just making sure I'm not missing questions on Twitter, but we'll go with a question from the audience.
So
do you have a mic for the gentleman? We're getting you a mic.
So far, everything we've talked about is very interesting, but there's been no mention of banks. You mentioned PayPal's doing some lending.
Mm-hmm.
So far we've. Hello?
All right, go ahead.
Point is, no mention of banks yet. You guys are doing some lending. It sounds like bank-type activities.
Mm-hmm.
Any things in the cards for PayPal specifically, or broadly the role of banks in this 3.0?
No, I think our relationship with banks actually is the best it's been in years. Because I think that we're very complementary if we can help each other. I think that if you look at the size of our lending portfolio, BML, it's in the single digits, billions of dollars, as compared with banks like the big banks that have hundreds and hundreds of billions of dollars of line of credit on their balance sheets. And our aspiration is not to go there. Our aspiration is basically to enable consumers and merchants who use PayPal to leverage us when they need it based on the data that we have. So in other words, we have data that some of the banks don't have access to, that enables us to make underwriting decisions that they can't make. And we want to do that for our customers. So it's basically a way to help them out. So you know, the media often love to peg us, you know, against, you know, card associations and banks, and we're the big bad devil that's going to eat the world. And the reality is that it's not black or white. Is that yes, you know, there are some areas we compete on, but the vast majority of opportunities we have to collaborate now. We're collaborating on, you know, tokenization with the association is one of them, and with banks we have a bunch of things we're working on right now that that will launch this year that are really exciting.
Excellent. Just going to make sure I'm not missing any questions on Twitter. We'll take another one from the audience. And your microphone is coming up on your left there. Thank you.
You were talking about leveraging on users' data to do some more like innovations. How about more general financial products like insurance, car insurance, other kinds of loan-ish products?
Well, I think that focus is important. So there's kind of a benefit and a curse of running a large company. The benefit is that you can do many, many things, and you can have many, many opportunities. The curse is that, you know, that's the very thing, and you need to have the discipline to focus on the things that you can really win in, and the things that you can really be a leader at and best in class in. And honestly, insurance is not something that I think we can be best in class in right now. And I think we have so many other things that we gotta either fix or innovate or, you know, develop in our core and right in our core business that not the right time for us.
I'm going to be a PayPal history geek here and point out that PayPal used to sell mutual funds.
Mm-hmm.
They had, in fact, they had their own family of mutual funds.
Mm-hmm.
It was going to be a, you know,
Yeah.
online financial supermarket.
Mm-hmm.
So it's long been in the company's DNA to kind of overreach.
Mm-hmm.
But you've been fighting against that.
Yeah.
How do you bat that down? It's like you've got 140 million customers. You could do anything.
Yeah. Well, I mean, it's best to do a few things really, really well than do many, many things really, really badly. And so we have that discipline of focusing on those things that matter. And we've killed so many things. You have no idea.
Because I never heard about them in the first place,
exactly.
probably.
But it's just you got to focus. And we have that discipline, and we're going to deprecate a whole bunch of products, by the way, this year. And that's going to be an important part. By the way, it takes as much effort and energy to build and launch a product than it is to retire one that has a lot of users on it. And you just got to have the fortitude and the discipline to, you know, clean up and just make sure that you have a clear product lineup and that it's clearly understandable by all of your constituents. And it's not trivial, but, you know, we're really committed to doing it.
I was going to ask you about whether I should get the PayPal Extras MasterCard or the PayPal Debit Card or the PayPal Payment Card.
I think you should get all of them.
Okay.
Now, joke aside, you got my point. Huh?
Yeah.
Yeah. Yes. So we'll rationalize all of that stuff. That's on the long list.
Right on. Let's see. I see a question back there. And I think that might be the last one.
Oh, okay. Thank you. Just riffing on a couple of questions which we've had, talking about emerging markets and banks. I mean, perhaps the biggest success in mobile payments is in Kenya with M-Pesa. Mm-hmm. And if you are not aware of it, you should probably look at PesaPal just from a trademark point of view. It exists, really. And in that case, the big company is the carrier, not the bank. Mm-hmm. And you've talked a lot about mobile, but you haven't mentioned carriers. So I'd be interested to get your perspective on that.
Well, that's where I come from with Zong, because we were doing carrier payments. I think that there's a lot of opportunity to do stuff with carriers, and we want to do that. It's just awfully hard to actually deal with them, really hard. And so I think that, you know, carriers, for instance, in Brazil. We couldn't have done what we've done without them, and, you know, the partnership we have with Vivo there is strong. In Japan, we even have a SoftBank joint venture that's doing really well, selling PayPal here and a host of other in-store solutions in Japan. And by the way, Japanese consumers love, the check-in and paying with their photo in stores. They love it, and it's just taking off. And so, we've got partnerships with carriers when they want to help us distribute our solutions, and we can work on those things together. Happy to do that. But they just got to make it easier. That's all.
Yeah.
Yeah.
That's the hardest thing to do in payments is easy.
Yes.
Excellent. Well, David, I would like to thank you very much for taking the
Thank
time.
you.
Thank you all for your time and the great questions.
Thank you.